Hello everyone. When it comes to international trade, a very commonly used financial instrument is a letter of credit. Let us get acquainted about the topic with the help of a case. There is a seller and a buyer who have decided on the exchange of spices for $10,000. But the concern is neither the seller can trust the buyer, nor the buyer can trust the seller, as they are doing this trade for the first time. The solution of the problem arises as in the form of a letter of credit, where the buyer and seller will be guaranteed by their banks. Hence we can define the letter of credit as a letter from the bank which will endorse that the buyer will make the payment after satisfying certain conditions. And in case the buyer will fail to make the payment, the guaranteeing bank will constitute the finalization. To begin with the understanding of the letter of credit, that's how it operates. Initially, it is the buyer or the importer who has agreed with the seller for price, quantity and other terms of sales. Now, for the payment, the buyer will approach his bank for the issuance of a letter of credit, and will request to open the credit letter in his name. The bank will ask for a collateral in the form of fixed deposit or a bond or similar. Please note, the bank will charge a fee for issuing the letter of credit, as the bank is going to take guarantee of the shipment payment in the future course of time. Finding the term satisfactory, the issuing bank will open a letter of credit. The letter of credit will be sent to the advising bank. This bank will verify the creditworthiness of the issuing bank and will advise the seller whether he can ship the goods or not. In case the advising bank is unable to verify the creditworthiness of the issuing bank, advising bank demands confirmation of the open LC from a recognized bank. If so, it is called confirmed letter of credit. Then the advising bank confirms the seller for the shipment of goods. And the seller finally sends the consignment. Now moving on to the flow of money and the documents. Once the seller has shipped the goods to the buyer, he will submit the shipping documents along with the bill of lading to the nominated bank, which is also known as a negotiating bank. This is called document presentation. The negotiating bank can be the same as the advising bank of the seller, and usually they are the same. Here, after the presentation of these documents, the negotiating bank will make the payment to the exporter. The release of payment usually takes 7 days, as the negotiating bank needs to verify the presented documents. Furthermore, the negotiating bank will make demand for payment from the issuing bank after forwarding the copy of documents. The opening bank or issuing bank will send the documents to the buyer and will make the payment to the negotiating bank. The buyer will make the payment on or before the due date given by the issuing bank against the opened letter of credit. Now, it is worth knowing about the various parties involved in the complete process of letter of credit. Very obviously, the first and foremost terms are the buyer and the seller. These are the parties who agree to commence terms of trade and conduct trade practice. The issuing bank is known as an opening bank because it opens the letter of credit against a fee after holding collateral in fixed deposit or in similar forms. The third party is the advising bank, which is the seller's bank. The function of this bank is to check the validity of the documents and the creditworthiness of the issuing banks, hence the buyer in turn. This bank advises the seller whether the goods will be shipped or not. The fourth party is the negotiating bank, to whom the documents are presented for the payment and the payment is released thereby. The endorsing bank or guaranteeing bank is not always available in all the process of letter of credit. The role of endorsing bank comes into picture only if the advising bank is unable to check the creditworthiness of the letter of credit issuing. Bank asks for some guarantee or endorsement of some recognized financial institution. Usually, in the normal process of letter of credit there are 4 parties involved. But, in case of a confirmed letter of credit, there are 5 parties involved. Although in the case of back-to-back letters of credit the number of parties increases to 6. We will be understanding these all types of letter of credits in detail in the next video. Please subscribe to the channel to get updates about it. Moving ahead, let us understand a few essentials of letter of credit that are to be remembered while writing this financial instrument. First and foremost thing is the standardization of the trade terms so as to protect the interest of each party involved in the cross-national process. For its standardization, the International Chamber of Commerce announces uniform custom practices for documentary credits, commonly known as UCPDC. The next thing is to take care of LC writing extensively, because the writing of letter of credit needs to be absolutely error-free. There is no scope of even minute errors. For example, if a company has ordered a wire of diameter 3.5 millimeters and in letter of credit it has been written as 3.50, in that case, payment will not be released because there is a difference of 0. Although, technically, it does not make any difference on the diameter size of the wire. However, the letter of credit terms will be considered voided. It is to be remembered that the release of payment is subject to the satisfaction of documents. The payment cannot be holded or revoked on the basis of quality of the goods received at the buyer's end. One more feature of a letter of credit is, it is issued against collateral at the issuing bank. The credit limit against that collateral depends upon the liaison with the bank. At times, the seller might require some funds to be released immediately after he receives a letter of credit. This period of payment realization is even longer in case of deferred letter of credit. In case the seller demands immediate payment, the negotiating bank might release the payment, but of lesser value, say 95% or like 92% of the total letter of credit value. That difference amount becomes the commission of the nominated bank. Now one question arises, how does a letter of credit differ from a bank guarantee? Then, bank guarantee is something which is exercised upon the failure and performance of the promising party. For instance, a contractor who commits to make a bridge needs to submit the bank guarantee with the tender offerer. In case the contractor completes the project and constructs the bridge, he will receive his payment normally. However, the bank guarantee will be exercised only if he fails to construct the bridge because of any reason. But this is not the case with letter of credit. To understand various kinds of letter of credit, please watch the next video. For any feedback and topic inclusion, please write in the comment section. Please like and share the video to learn more topics. Don't forget to subscribe to the channel Autodidact to stay updated. Till then, stay healthy and happy. All the best.